What's up, everyone? This is Chris Talks Crypto. Making a video here about Marathon Digital Holdings. So this is a crypto mining company, Bitcoin mining company. They've been around since 2012. I actually recorded this video a couple of days ago, but I don't know what happened with my software, but it just did not take. I only got audio, no real video. So we're remaking this. Gonna take a look at the stock and see where it could potentially go. And so this is their website, Marathon Digital Holdings, setting the pace for the Bitcoin mining industry. So currently that stock is sitting at $17.72. So they have 15,174 Bitcoin as of the end of last year. This is their hash rate, their operational, their fleet efficiency. Sorry about that. And they have 10 mining facilities. So again, what do? They've been around for years and years at this point, 12 years at this point. Marathon Digital Holdings is one of the largest, most energy efficient, and most technologically advanced Bitcoin mining companies, as well as one of the largest holders of Bitcoin among publicly traded companies in America. Some of the other ones are MicroStrategies, Grayscale Bitcoin Trust. It's going to be a lot more as time goes by, but right now they are the big boy. One of the big boys for sure. We differentiate by investing in the most advanced technologies and leveraging innovative techniques to convert energy into economic value while helping keep Bitcoin's ledger up to date and secure one block at a time. So the more mining that's going on, the more secure that Bitcoin actually is. So, you can look at their operations and investors. We're not going to go all into that, but this is kind of an overview of who they are. They are a Bitcoin mining company. They are at the forefront of Bitcoin and the mining industry, so it's pretty interesting. Let's look at the stock itself. Marathon Digital Holdings, MARA is your ticker. $17.73 is your price point. Looks like it moved up a little bit in post market, but nothing major. Key stats: the market cap is about $4 billion. $4 billion worth of market cap, and most of that is coming obviously from the Bitcoin holdings and whatnot that they have. I think they just said 15,000. Net income, same way I talked about Coinbase. These are crypto-based companies. So, they lost $686 million in the last. I guess this is year over year, but that's not surprising. It's not surprising because really all of these companies are very hinged on what crypto is doing. They're very cyclical in that nature, and they go up and down as the crypto market goes up and down. So these are ones, at least for now, at least they have been in the past. I think we're getting to the point in crypto history where companies like this actually take off. Like they continue to take off because we're going to hit a supply crunch. We're going to hit a supply crunch somewhere in the near future, probably in the next year or two, to where you have a lot of major companies and these big players who now, hey, again, there's only 21 million. Even if every millionaire in the world wanted a Bitcoin, they couldn't have one. That's just not how it works. There's a hard cap on supply, and I don't think people really understand that just yet. So this is negative. That doesn't concern me in the least at this point, especially at the point where we're at. This is definitely by the end of 2024 going to be a positive number as the revenue from Bitcoin continues to go up. Again, the revenue was 117 million. That's how much they brought in from their operations. 216 million something shares, so on and so forth. Again, technology based in Las Vegas. So that's kind of a little bit of overview of what they are. So as you can see, like 2021, their revenue was much higher. This is blue line, and then obviously now 2022, that was a huge down year. So they did not see that much revenue. We'll look at the charts in a second, but I want to kind of talk a little bit more of so I've talked about like who they are. This is the more fundamental analysis, and let's look at on-chain analysis. So one of the biggest sites for Bitcoin is looking at bitcoin.com. It gives a lot of key metrics. So, you got live price action. They finally just made like a paid option too. Like that's something new within the past couple months. Market cycle charts, on-chain indicators, and really I want to look at what the miners are doing. On-chain movement, that's the cool part about crypto. All of this is public, you can see it. Address balances, so on and so forth. Mining charts. So this is what we want to look at. So Bitcoin hash rate, this is how many computations per second are being done. So again, Bitcoin is its value. It's value that's unlocked by every time a block is mined, that whoever mined that block gets a reward. And all the miners, they are using computer power to mine these Bitcoins. They're not using pickaxes and shovels. They're using computer power. And the more hash rate that you have, the more computations per second overall, not just one miner, but all of them across the globe, the more secure the network is. Because at that point, it takes a lot more power to overcome the system than if, you just had some lone miners. Like the system was way less secure back here, way less secure back here. But you see, this is a very much so exponential curve that's going up to the upside. So, hash rate is up. We're at all-time highs at this point as of, Sunday, January 28th. So the network is secure. I mean, people are absolutely using it. So that's good to see. We have seen no real downward trend in that sense. We'll take a look at some of these other ones. Bitcoin difficulty is going to be the same as the hash rate pretty much. It's algorithmically programmed into Bitcoin that, if you lay these over top of each other, it's the same chart. So as hash rate goes up, the difficulty goes up too. So way back here, you could mine Bitcoin off of a laptop, like, standard laptop, you get 50 Bitcoins for every block you solve, then 25, then 12 and a half, and so on and so forth, halvings. Now you need entire industrial facilities, hence these Marathons of the world, Riots, and all these other major mining operations. Like they have huge industrial facilities with tons of technology and methods for cooling to keep the equipment running. Like these are very high powered operations, and they have huge monthly electric bills too. So the difficulty goes up exponentially. The difficulty continues to go up exponentially, and it will continue in that way. So how does that relate to Marathon? Again, it's no longer a layman's game when it comes to mining. There's going to be a few key players that have a lot of computing power that are able to mine these Bitcoins. And they're going to be the ones who win the day. So let's look at miner revenue. Miner revenue total. So if we look at all of these different Bitcoin is very predictable in this way. So these are, we look at the revenue right here. It's slowly decreasing over time, and like each of these lines is a halving. This is a halving period. This is a halving period. As you can see, like that miner revenue is decreasing. Like we're mining about 900 to 1,000 Bitcoins a day. And a lot of that is coming again from like these bigger players. So that's block rewards. Let's look at the fees versus the rewards. So this is an interesting chart. So you take a look at January 2013. This is a period where Bitcoin was, doing pretty big things. This is way back when not a lot of people were paying attention to it. Everyone knows about 2017, 2018. Like we see the fees for miners were super high. 2019, then you had the drop off 2020. 2021, everyone knows that this was a huge period for Bitcoin as well, crypto in general. Both of these were huge periods for crypto in general, but we see something else forming. A lot of this, we're starting to get back into the period where like the fees for mining are getting very high. And that's not necessarily a bad thing. I kind of look at it like taxes, right? If you're going to do business, you're going to have to pay tax. Like the more money you make, the more taxes you're going to make. So as these fees go up, that means like the Bitcoin miners are actually making more money. Obviously, they have more fees that go along with it. They want to, do the best that they can, but there are fees that are associated with this. So when you see stuff like this spiking, you know that there's going to be a lot of activity in the future, just as it did literally in every other one that was here. And I think this one's going to be a huge one. We're about to go into a huge cycle, only because like if you look at it right now, the fees are already way up here, dwarfing this 2021 and dwarfing the entirety of 2017, and we have not even started the real run up. If you look at it, we're still below all time highs. We're still $27,000 below all time highs. So yeah, it's good to see. Again, like it's the cost of doing business. More money, you got to pay more. So let's take a look at the chart of Marathon. Taking a little look here. Let me get rid of some of this stuff. I don't need the dividers right now. Okay, so taking a look at Marathon. If we'll go walk it down time frame by time frame at the monthly chart. started way up here, IPO'd somewhere in 2012, and it just dropped. It just dropped. And then it came back up again around 2014. Again, this is a big time for Bitcoin mining. They made a lot of money. 2016, you see it moves in spikes. Like, again, it's moving downward here, but now 2017, 2018, we really bottomed out here. I'm not sure exactly what was going on with their company at this time, but 2021, you saw these major spikes. These major spikes up. It went from like $2, literally $2 to $84 in the span of a couple months. Probably about 15 months or so. So that's a 40x on your money. You don't see that very often. Those are like AMC GameStop numbers for real. So at this point, it very much so follows the Bitcoin movement. So if you remember anything about Bitcoin, you had a huge run up until April of 2021. You saw a drop off, and then another run up into the end of the year in November, and then the bear market, just absolute bear market. And then you got down here, started ranging, and all of 2023 was an upward movement. So up, and then a little bit of downward movement towards the middle of the year, and then the end of the year, you just went on an absolute tear. So at this point, we are almost above the 100 moving average, and could continue to go on to the upside. I truly believe that we will go on to the upside, but I'm going to have to break a few points. We will have to break 53. This is like the most recent high of 84. You're going to have to break 155 and 223. That's just assuming somehow we get all the way back up here, and that's no guarantee, but I think this is absolutely plausible. This one's almost, I believe that's going to happen too, and then you can get to 156 potentially, but we'll see. Again, like, their market cap is $4 billion right now. Right now they're sitting at $17. What is that? What is 156 divided by 17? 156 divided by 17. I'm looking at the price scale right here. That's a 9x. So 9x times 4 billion. So they'd have to get 36 billion. So they'd have to get another $32 billion. I think in a bull market like this, that's not unfeasible. It's not unfeasible that you could potentially hit 156. So I was saying the other week on Coinbase, I could see them potentially gain about 200. I think they were sitting about like 30 billion. I can see them getting about 200 billion because, again, they are going to be the major exchange for this, at least on the side of America, the major exchange for the crypto bull run. So this is my first target. This is my second target. Both of these, in my mind, feasible. Third target, you could get up to here. And then finally, your all-time high, if we think we can get there. I think that's a little bit out of range, but something that we could do for sure, potentially. So what else do I want to talk about? Let's step down on the charts. Weekly charts. If we take a look here, again, we had the major rundown that was characteristic of the Bitcoin bull market, bear market, I should say. Sorry about that. And if I draw a parallel line here, we broke out of this range. There's a range here. Up, down, up, down. And then finally this move up, and now we come back down to retest this, all the moving averages. This is a very high area of confluences. So it's kind of interesting here. Like, price ran up to here and then stopped right here at this last previous high. Makes sense. This should not be a major stopping point on the next run, since it already did come up there and pretty much break it. You should have a good clean runway to make good waves all the way up to about 83. Huge imbalance. So yeah, that's going to be nothing. We can clean that up. Maybe a stop at 97, another stop at 118. This is a perfect head and shoulders right there. And then finally all the way up to 156. So I really don't see that being a huge obstacle there. Daily chart, where have we been recently? Let's take a look at that. 2023 was last year. We saw the pits down at literally the very end of the year, 29th. Came up and down and up and down. We finally got above these moving averages. June, you saw a great run up, and then for crypto, it was pretty terrible between August and really, I'd say, about late October. It was just very stagnant. But you see, we get to October here. October 23rd was the day that Bitcoin really ripped to the upside. And you see it has not stopped since. Like if we would have gotten into this about 3 months ago, we would have caught it at $7. It has since doubled. We have doubled since then. And I think that's only going to continue. That's going to continue, and we'll go from there. So yeah, these are very interesting times. Like again, those are kind of my targets. Just a very, kind of shallow technical analysis that we're looking at here. And you finally have a trend line kind of that goes right there. So I mean, worst case, I could see us coming back down to like 12 or 13. I wouldn't bank on it. But then, continuing on to the upside, and, it's something we could look at. So what I tend to do with these stock analysis is look at, these are longer, at least for the crypto ones. These are more of my long-term plays. Like this is something that I would look at to say, okay, in a year and a half or 2 years, where could this be? That's what I'm talking about. I'm not talking about next week. I'm not talking about a couple months from now. I'm talking about a year and a half before, probably about the end of 2025 is what I'm looking at. So you can do leaps, which are long-term options plays. I've already kind of done the work here. So Mara is your ticker. This is your current price. Since I believe that we're going long, I'm gonna buy a long call option. And here's your options chain at this point. So let's say like you want to buy an out of the money call at $45. If that means that if we get to $45, we break even. And anything that it continues on past that, you're making money, you're making money, you're making money. $6.90 is what we called it, or $7, called the middle one. So that's a $700 contract because you have to buy at least 100 options per contract. So let's just set the setting anywhere between 0 and 250. And this is what we get, right? So again, I said you have to make it to your strike point. So $48. I think it was $48 that we chose. And that is the point where you start making money, is break even. Like it could be up 400, could be down 400. It just depends once you get there. But again, I'm saying that we could potentially hit, let's see what it hits at these different areas, right? So you have 53, you have 83, and you have, let's say 156, and finally about 230. So 56, again, you're just at the point where you're making money. Not huge returns, but I think we're going to do way better than that. You have 80 something. So it's $2,000 off of a $700 bet. 2,800. So that's a 400% move. I can't remember what the other one was. 156. Now we start getting into these upper realms, which I think 150 is easily something that we could hit. That's $10,000 off a $700 bet. And obviously none of this is financial advice. It's just an opportunity I'm looking at. And finally, let's say we get up to about 250. That's $19,000 off of $700, which could be out of the realm of possibility, could not. I didn't really talk about what date we were talking about. So again, I'm talking about the end of 2025. Like these are long-term 2-year plays that I'm talking about. And obviously you can buy more contracts. If I wanted to buy 10 contracts, it's going to be a little pricier, $7,000. But some people don't want to actually get into crypto. This is an option for people who potentially want to just go the stock route. You can get exposure without actually having to hold Bitcoin. So at that point, you've spent $7,000, 2,800% return. That's $196,000. So these are all options, and again, these are just projected points that we could hit. Different strategic areas, but I think this is an opportunity. There's a lot of crypto stocks out there that are going to do very well over the next 2 years, but we will see. Thank you guys for listening. Again, this has been Chris Talks Crypto. Check out any crypto resources on christalkscrypto.com, and I will see you guys on the moon. Take care.